Hey, Amanda, how are you doing?
Great, Charlene. How are you?
I'm good, I'm good. I'm so excited about this because I keep asking you the same questions over and over again. So we're going to make a video so that we know and everybody else that wants to watch will know what we're talking about. And we're going to talk about credit score and credit reports. Um, by way of introduction, I am Charlene Williams. I am a realtor. I've been a realtor for 14 years, and I'm currently with Real Estate Homeward. And I have Amanda, the lovely Amanda, with me, and she's a mortgage broker, and I'm going to let her introduce herself.
Yeah, so my name is Amanda Pivar. I'm a mortgage agent with Fine Group, and I've been a broker for 8 years, but been in the industry for over 11. So I know lots of tips and tricks about mortgages.
That's excellent, Amanda. So I'm just going to jump right into this. So yesterday's I was having a conversation with someone regarding credit score and building credit.
Mhm.
He has a 712 credit score. Is that a good score?
Oh yeah, that's a great score.
Okay. His concern is about being with an A lender versus a B lender. And I know we've had this discussion before, but now we're going to get down into the dirty on this.
Perfect.
So, as a 712, would he be able to go with an A lender?
Absolutely. So really for A lenders, anything above 680 or higher, we consider a really good credit score and wouldn't hesitate to put an A lender. We can potentially put people with a little bit of a lower score, maybe around the 650 mark, also with an A lender. I've even done credit scores as low as 605 with an A lender because of the circumstances that got them there. So there are lots of options, but as someone that has a 680 or above is a shoe in credit wise for an A lender. And I say credit wise because credit, unfortunately, is not the only thing we look at.
Right. So the other two things that mortgage brokers and mortgage and banks look at it for providing mortgages are income and down payment. Is that correct?
Correct. So we look at your credit history, we look at what your income is, and then we look at the down payment. Because down payment, if it's less than 20% down, we automatically know where it needs to be. 20% or more, we have a lot more options.
So under 20% down, you would put with a B lender?
We cannot. So if someone has less than 20% down payment, they have to go with an A lender because
Okay.
lenders do not insure mortgages.
Okay. So um if it's over 20% again and you've got a 712 credit score, so you are definitely going to be with an A lender.
If
Well,
no, I say definitely just because we look if you're self-employed, don't really show much, we make it an
right.
lender, but with a 712, it will give you all the options available to you.
Okay. Income wise.
Mhm.
Now I know we've discussed this before on the phone, and I've had several discussions with you about this. We live in a very, very expensive city. So typically, what would you see as um income for someone that wants to purchase, let's say, a condo?
That's a really hard question. I always say that mortgages are not one size fits all. We look
Mm-hmm.
at so many other things, like we take into consideration credit. One person might have a student loan, one person might have a car loan, one person might not have anything that's owing. So those things like that really factor in. They also take into consideration down payment, condo fee, property taxes. These have big effects on what people are purchasing and what the income needed is. So that's a question that I personally don't like to generalize. I like to really
Mm-hmm.
do it uniquely for each person.
No, I understand that. I'm gonna ask you a different way though.
Okay.
Let's say you make 85 grand a year,
Okay.
you have a down payment of 5%, and your credit score is 712.
Okay.
Would you be a lender material?
It would be absolutely.
Okay. Okay. So, I guess what I'm trying to say is that they would have to have at least some sort of down payment um to be in considered and in the higher interest rate, like the proper interest rate for an A lender.
Correct. So down payment, credit score, income would all be taken into consideration to be with an A lender.
Right,
That
right.
is a big
Oh,
portion of it.
okay. So from what I understood,
Mhm.
I'm gonna say double income, or you could be one person making like 150 a year. And what are we looking at in terms of, just generally speaking, if they had 20% down? I did a bit of a calculation the other day that was, you're making 175 grand a year. You've
Yep.
got at least $135,000 for a down payment,
Yep.
and your credit score is 712. What type of payment are we looking at? I came up with somewhere around $2,400 for a $400,000 loan. So
That's
the condo that you're purchasing would be 525 or 535, somewhere around there.
Yeah, I mean, that's a very good estimate of where it's going to be around.
Right.
Could be slightly lower depending on the rate. Now, amortization wise, did you use a 25-year or a 30-year?
Yeah, I used a 25 year.
You could probably even have a lower monthly payment of around $2,200 if you had a 30-year AM.
A 30 year.
Yeah.
Okay. So is a longer amortization better or a shorter amortization?
You know what? It really depends on the person. So I personally have always used a longer for myself. I like keeping my monthly expenses low, but taking advantage of my lump sum prepayment options. That's
Hmm.
going to get you to the same place at the end of the day. A 25-year is great if it falls under an insurable mortgage, but if your rate is the exact same for a 30 versus a 25, a lot of people choose to have those lower monthly payments, especially a first-time home buyer who has that option and that 20% down payment. I always say to first-time home buyers, if the rate's the exact same, do a lower payment, get used to having these new expenses you've never had before, and then take advantage of the prepayments, increase your payment down the road. It doesn't have to be a right away thing. Mortgages are a marathon, not a sprint.
That's a good one. Okay. That makes a lot of sense.
Yeah.
So to
I also
summarize, sorry, go ahead.
I was gonna say, I also wanted to circle back before I forget in regards to the credit conversation we were having.
Hmm.
A lot of people watching this call are probably newer to Canada and thinking, you know what, I don't have any credit. How am I going to buy? So we actually have really good new to Canada programs for anyone who's been here for less than 5 years, that they'll look at alternative sources of credit to determine what your credit is to help you still purchase. Also, anyone who's going to be watching this and is like, I don't have a credit score. They never taught me in the school, but I've been paying my rent. I've been paying my car insurance. I'm
Hmm.
many different bills. We can look at alternative sources of credit when qualifying someone for a mortgage. It is document heavy, but at the end of the day, if it gets you a property, then that's the main thing.
Right, right. And I know document heavy, by document heavy, you mean you're asking them for a lot of information and they're probably thinking, oh, this is an invasion of my privacy, because that's what I thought as well. And oh my gosh, Amanda needs this, Amanda needs that. And I know it's for the betterment of me, which is why I keep doing it. So just keep that in mind, that she's not asking because she wants to upset you. She's asking because it's for the betterment of you, right?
Really, it's what's required of me to, usually it's coming right from a lender. Trust me,
Hmm.
I'll ask for the littlest documents I possibly could because I don't want to review it all, but I have to do what the lender says to satisfy,
Right,
ultimately get my clients the mortgage. So I am the
right.
messenger and don't shoot the messenger.
That's right. Um, you know, I had one question that came to mind. I have clients from the US that came here. They're working here, everything else. And I know that we're totally different countries, but
Well, yeah.
it's not like they are from, I don't know, Europe or something like that. It's just right there. Do we take into account any of their credit reporting and match it with ours,
We actually,
sort of thing?
yeah, so we actually can check American credit history. So we're able to request that from the US.
So it's not as difficult as I think it is.
Not at all. Even Europe is really not that difficult either. And the most difficult thing about a country that English is not the first language is it has to be professionally translated.
Right. And my clients, let's say if I had clients from the Philippines and they bank with an English international bank, then that would make it easier as well, right?
And honestly, for those clients, we can get alternative sources of credit, like 6 month bank statements from overseas or
Oh,
credit
okay.
history from overseas, 6 months history for Canada. Like there's a lot of ways around it that credit is not the stopper for anyone who's new to their country. Unfortunately, right now, anyone on a work visa, their stopper is the Canadian government and the new policies.
Right, right. And that 2-year ban on purchasing.
That's correct. Yes.
Okay. This is good news, and I mean a lot of it is new news to me, so I can, better service my clients. And if I had those questions come up that I couldn't answer, I would, ask you.
Absolutely. Anytime questions come up, just let me know.
All right. Thank you so much, Amanda, for your really, really good explanations. I don't know what I would do without you.
Anytime. I'm here to help.
Excellent.
Bye,
All right.
Charlene.
Talk to you soon. Bye-bye.